All right, so let's begin the show with today's Meet Your Fund Manager segment, where we will talk about arbitrage fund. What are arbitrage fund? When are they expected to perform better? What are the risk factors associated? And what investors should keep in mind while picking up an arbitrage fund for their portfolio? All of this and more to discuss with the arbitrage fund manager. So today the focus is on Bandhan Arbitrage Fund, and with me is Nemish Sheth, Associate Vice President Equity, Bandhan AMC. Nemish, good evening and welcome to the show. We will definitely talk about the nitty-gritties of the fund and the way the portfolio has been designed. But then before that, let's just start with a very basic question. What are arbitrage funds and how do they work?
Sure. Thank you, Kavita, for having me on the show. While arbitrage are relatively a bit complex, I will try to explain it in a very short and a simple manner. Arbitrage funds are basically equity-oriented hybrid funds, wherein a fund manager engages in buying a particular security or stock in a cash market segment and simultaneously selling the same stock in a future or a derivative market segment at a premium. Now, this premium is also referred as spreads, eventually, which are the returns for an arbitrage fund. Let me illustrate this. A fund manager buys or engages a buying a particular stock at 100 rupees in a cash market segment. Simultaneously, a fund manager will also sell the same stock in a future market at 101. Now, this spread of 1 rupee is a premium which an arbitrage fund manager will earn. Now, this 1 rupee is a premium also known as a spread, which are typically a return for an arbitrage fund. So this is what happens when a fund manager engages in a particular arbitrage activity.
Right, Nemish. So now looking at a particular fund, I would want to know what is the current portfolio structure and exposure in your fund, and how is the fund keeping up with the market volatility?
Sure. So as I had referred, it's an equity-oriented arbitrage fund. So predominantly, we have an exposure of around 65 to 75% in an equity and equity-related instruments, whereas the remaining 25 to 30% is into debt and money market instruments. So as it qualifies and it's an allocation of more than 65%, it also has an benefit of an equity taxation. Now, as we had positioned last month, we are around 72 to 70% equity allocation. Now, this is factoring how the markets are moving and what is the momentum of the market. What are the yields as compared to its relative peers category. So this is how we will try to, align and design our portfolio according to the market sentiments.
Got it. Talking about your sector exposure, could you elaborate on that?
So basically, because it's a properly hedged kind of a portfolio, we would have around 65 to 75% in a large cap category, whereas the 25 to 35% would be in the mid cap to small cap category. So this is how we structure the portfolio based on the large and the small cap sector analysis.
All right. Looking at the timing and looking at the volatility in the market, what is the current strategy that the fund is adopting in terms of, hedging and in terms of placing your bets?
Sure. So we have observed and our past data suggests us that whenever market is in an uptrend or the positive momentum of the market with an volatility, it has always favored the arbitrage category with respect to its relative peer category. Currently, as we have seen from last 3-6 months, we have seen that there has been positive momentum in the market. We have seen that this category has outperformed most of its relative peers. And this has been reflected in the performance of the fund in last 3-6 months. Also, what we have seen is in last couple of months, we have seen the category getting back the inflows which was expected and which has been underperformed from quite a while. We've seen around 10 to 15,000 crore back to the industry and the category. As a fund house, we are expecting that this momentum could continue going ahead, and we would continue to see the favor in the scheme going ahead. So we can expect that 5 to 10,000 more crores back in the category where we had seen it last in March 2020. Also, if we have analyzed this category, ideally gives a positive return and has never given a negative return if you hold it for 30 to 50 days. So being a properly hedged kind of a portfolio with an equity taxation, I think this is a well-placed category currently to play with the market.
Nemish, now keeping that in mind, I also want you to help us understand the kind of risk factor and a risk profile that one needs to have in order to have an arbitrage fund in their portfolio, and how, when we compare it, when we compare the returns to maybe any debt instrument, is there an upper hand in terms of returns as well?
Right. So basically, as this is properly hedged portfolio, we have to consider that there might be some few risks in the market. The risk kind of a market risk or a liquidity risk. A scenario where uneven event kind of an event happens in global geopolitical markets that can affect the returns of the portfolio. Irrespective to the category, we have seen that this category has given a better returns than the few of the debt category. So we currently are positioned that this kind of category would continue to give a better return than relative to its debt peers.
Talking about the inflow, how has been the inflow in Bandhan Arbitrage Fund? A couple of months inflow, if I just want to understand the trend.
So last couple of months, we have seen around 20 to 25% of inflows back to the category, and the same inflows we have seen in the Bandhan Arbitrage Fund. As I have mentioned, that we would continue to see such kind of an inflows in the category because of its performance and the yields inching up. We could see more inflows into such category.
Nemish, now, generally the price spread of equities in the cash market and the future market depends a lot, the trajectory of these funds to perform. So far, you think these spreads have improved in a couple of months. What would be the current status and how would you explain that?
So we have seen the spreads been improved post 2021. We have seen that when the interest rate scenario started picking up, we saw the yields were nagging behind the relative peer category. What has happened is as soon as the market sentiments improved and we see a lot of inflows into cash equity segment, what happens is a lot of positions on the future side also tends to roll over, and this has benefited the category in last 3-6 months. Also, the data suggests that this uptrend in the market and the sentiments in the market would continue. So hence we are pitching and we are recommending this category to invest for the investors.
Okay, more or less we can say that the returns are in line with the money market instruments.
It has been outperforming by 50 bips to the money market instruments. One is because we've seen the equity momentum in favor of the arbitrage category because of its tilt towards an equity instruments. Second is it has a clear benefit of having an equity taxation. So both of these have worked in favor of the category, and we continue to foresee that we can have this conditions going ahead the same.
How are you playing the debt part in the portfolio now, looking at the interest rate scenario, and what we also got to know from the Jackson Hole meeting also, and inflation is still a problem, monsoon is still a problem for us when we talk about domestic triggers. How is the debt play being played in the fund?
So, as I had mentioned, this is basically an equity and equity related instruments. So, ideally, 65 to 75% is an equity related instruments. The only part of 20-25% which we have in debt component is basically a margin and collateral given for taking a position on equity and equity related instruments. So besides that, 3 to 4% we would have high debt papers. Besides that, 1-2% we will have a cash. So debt is a component which we play for collateral and margins, and we buy a high quality debt papers like a treasury bills or government securities, which are well liquid in on any of the markets.
All right. So talking about this particular category, which is the category that would clash for an investor if they place it in their portfolio? What kind of an advantage first this kind of a fund can give to their portfolio in terms of diversification and in terms of a tactical play if at all they want one, and also which category to avoid if you already have an arbitrage category in your portfolio?
So it all depends on what is the scenario currently and what is the expectations of going ahead in the future. So currently, as a while back, debt was a favorite category, and interest rate scenario also was in positive momentum for a debt instrument. So we were of an opinion that the tenth of the money should go towards the debt instruments. As we have seen that the market sentiments have improved, we had suggested and we were recommending our investors and the distributors for going ahead with an arbitrage category based on the how the sentiments of the markets are, and this is how we would place going ahead also. Any situation comes, we would try to move from an arbitrage category where the yields are coming off. We would try to move on the ultra short-term category or debt category.
All right, things to keep in mind when you want to opt for an arbitrage fund in a portfolio. What should be the key highlights or the key homework that an investor needs to do, Nemish?
So basically, whenever any of the investor who wants to invest in a category would have to take into consideration the market risk, the liquidity risk. Even if we say it's an perfectly hedged fund, it comes with the volatility, it comes with market risk. So we would suggest, we will always try to suggest to the investors that come to a category where you have an investment horizon of 6 months to 1 year. Also come with an horizon that this is a volatile market, so the returns will not be as what it has generated in the past. So come with an expectation that in a volatile market we can have a volatile kind of a returns.
All right, Nemish, thank you so much for being on the show today, helping our viewers understand all the nitty-gritties of an arbitrage fund, and thank you so much for giving us all the details on Bandhan Arbitrage Fund.
Thank you. Thanks, Kavita. Thank you so much.
All right, so that was all about the Bandhan Arbitrage Fund, and we also help you understand this particular category for your portfolio and the diversification process. It's time for a quick break, but then before that, let me also give you our WhatsApp number and our email ID where we keep waiting for your portfolio-related queries. All you have to do is just send us your queries, be it about mutual fund, insurance, tax, a loan, anything to do about your financial portfolio or your financial planning or your financial goals. Just WhatsApp your question to on 865-797-4571, or you can also email us your question on themoneyshow@etnow.tv. So that's the place where we keep waiting for your queries. A quick break, and post that, let's talk about your investment in gold.